China is likely to be the only G20 country to have positive GDP growth in the year 2020, according to the OECD. Now, the OECD's interim economic outlook projects global GDP to fall by 4.5% this year, before growing by 5% in 2021. The forecasts are less negative than those in OECD's June economic outlook, which forecasted a 26% decline, due primarily to better than expected outcomes for China and the United States in the first half of this year and a response by governments on a massive scale. However, output in many countries at the end of 2021 will still be below levels from the end of 2019 and well below what was projected prior to the COVID-19 pandemic. Now, if the threat from COVID-19 fades more quickly than expected, then improved business and consumer confidence could boost global activity sharply in 2021. China is now the only G20 country expected to have positive GDP growth in 2020, as a 2.6% decline was forecasted in the June report. Let's now have a look at China's A50 CFD. The index is supported by a rising trend line and in place since March bottom, currently around 15,200. As a consequence, traders may consider long positions above 15,200, with an August top at 16,000 and the June top at 16,500 in sight. Alternatively, a downside breakout of 15,200 would trigger a bearish acceleration towards the $14,700 polarity area. For City Index, I'm James Swinney.